Welcome back, guys, to another video. And in today's video, we will be going over a common question that's asked by a lot of our buyers and a lot of our listeners. What is the best loan program available to the first-time home buyer? Well, today I'm going to share with you a program if you're looking for minimum down payment, really low cash to close, and a badass rate. Well, there's only one program that does that, and that is the conventional conforming program. When it comes to zero down programs, there's a lot of other programs that are available. This one is a minimum down, which I'll be going over in a quick second of how much you need to put down for this program. But there's a lot of programs, like there's a Cal HAFA program available that allows you to do 0% down. But essentially in the Bay Area, those programs just really don't work because the per capita income is higher here in the area. So you usually get priced out, or if you do qualify for that program, then now you're not going to be able to afford the mortgage because the purchase prices are so high. So those programs really don't work. The other program is the FHA program, when you think of the first time buyer program, which allows you to do 3.5% down. And the reason why I put an X on it, because right now, since after the coronavirus and what's happening in the market, this program no longer, according to me, and I'll show you why, is not a good program to go with. Because the FHA is charging high premiums, because to them it's a high risk program because you have less skin in the game and nobody really knows what's going to happen in the job situation. So you're getting charged a lot for this program. Now, if you're watching this video and you're looking to buy a property million plus and your loan amount's probably going to be, 760 plus, well, then this video is not for you today. We will have another video for jumbo loans. Today it's mainly for conventional conforming loans in the Alameda County or Santa Clara County, particularly in the East Bay area, South Bay area, where your loan limits are 760 and below, and this video is for you. So today I'm gonna throw both of these scenarios on the board for you, and we're gonna look at a real-time scenario here in the Bay Area, and you're gonna be able to decipher why the FHA is not a good program and why the conventional conforming program is an amazing, amazing program. So let's go to the board. So usually when you think about a first-time buyer program or a minimum down payment, you think of the FHA loan program, which allows you to put 3.5% down, which sounds very competitive, but here it's why it is not competitive. Say you are buying a home in the Bay Area for $730,000 and you pursue an FHA mortgage with 3.5%. So your down payment is going to be $25,550, which makes your LTV 96.5%. And say you have a great credit score of 740. Here is what you would get on an FHA mortgage. Now, this rate quote is from July 31st, 2020, since rates shift daily. You would get a 3.75% rate for 30-year fixed, with $16,000 in discount points, which means you will pay $16,000 for that rate. And don't forget, your closing costs will be on top of that. And a loan a size of this stature, you're looking at about $6,000 of closing costs plus taxes, insurance, and prepaid interest. So you're looking at about $26,000 cash to close that you would need to bring in. And remember, don't forget that $25,550 on top of that. Also, because you're putting less than 20% down, and whenever you do that, you have something called mortgage insurance. The mortgage insurance on the FHA program will be $611 per month, which will be on top of your PITI. So your total principal, interest, taxes, and insurance plus the mortgage insurance payment for the month will be $4,820.93. This is not a good program right now. So now let's look at the same scenario under the conventional mortgage program, where the minimum down payment is 5% instead of the 3.5%. All other conditions remain the same. Now your down payment will be $36,500, giving you an LTV of about 95%. And here is what we have for this scenario. You will get a rate of 2.99% with $4,500 in rebate back to you, which can be applied towards your closing costs. In this scenario, your total cash to close will be about $6,000, which is not included in your down payment. But if you compare the cash to close, you're saving almost $20,000 on this loan compared to the FHA program. And your PITI plus your mortgage insurance on this will be $4,006.51. You will save about $800 a month on this program by putting just a little bit more down on this program. And check this, your mortgage insurance on this program will only be $196. So I hope that information was very helpful on the board. So the key takeaways today on this conventional conforming program. This program is going to give you a much lower monthly payment compared to your FHA program. Second, since the rate market is so competitive right now, I would urge all of our buyers to use leverage. Time value of money is now, not 10 years from now. So if you're getting a 2.99% interest rate with 5% down and your closing costs covered, that is a no-brainer to me to go with the minimum down. Now, if you're like, man, I want to put that extra down, I have the extra down, by all means do that if you have it. But if I were in your shoes, I would take that 5% down program, and you can always refi or flush more money back into it on a later time because there are no prepayment penalties on these programs. Third, get a rate that is going to give you some closing cost coverage that you can take and offset some of your closing costs. So maybe your credit score is a little lower, and I ran this scenario at 740. Maybe you have a 720 credit score. Now you're not getting the 2.99. Maybe you're getting a 3.25, and that's giving you the $5,000 rebate or $4,500 rebates. Go with that program. Don't worry about the whole psychological thing of, 2.99 compared to 3.25. Yes, your payment might differ a little bit, but do the math. How much does your payment differ compared to all that cash that you're getting now that you can use towards your closing costs? Well, I hope this video was insightful to you. Please don't forget to share, like, and comment because I love to hear from you, and hit that subscribe button on our YouTube channel to get our videos firsthand every Thursday at 10 a.m. Again, this is Karan Singh with Optimal Loans. Until next time.